In business, Safaricom has received approval to issue a 40 billion shilling medium-term note, signaling renewed momentum in Kenya's corporate bond market. Analysts say the move reflects a broader shift, with more companies turning to bonds as they seek stable and predictable financing for growth. Our reporter Dennis Otieno looks at why corporates are increasingly opting for bonds and what this means for investors.
Safaricom's move has set the pace for a rising trend in Kenya's corporate sector. The telco plans to issue the 40 billion shilling bond in several tranches, including green and sustainability-linked notes to fund infrastructure projects both locally and in Ethiopia.
It is the highest we've seen. The quantum is high at 40 billion, but when you look at their cash generation ability, even at a half-year level, vis-a-vis the amount that they're seeking, it's quite manageable for them.
Safaricom is not alone. East African breweries recently issued an 11 billion shilling 5-year fixed-rate note that was oversubscribed. Family Bank has raised 4.42 billion shillings through a public bond and an additional 6.2 billion via private placement. Kenya Mortgage Refinance Company's 1.4 billion shilling debut bond was oversubscribed nearly 5 times, attracting over 8 billion shillings from investors. According to analysts, several factors are driving this renewed appetite.
Debt is cheaper than equity. You can imagine the process of going back to shareholders for a rights issue tends to be tedious and takes time. Whereas for debts, it's easily acceptable. And sometimes when you're seeking large amounts, capital markets tends to be conducive because, one, it gives investors who are purchasing this paper the ability to exit at any time within the capital market instruments. That is the secondary market.
Observers reckon this trend signals a maturing investment landscape in Kenya's financial markets.
But as depth comes in and companies become significant within the sectors that are playing with, and they gain market confidence, more they will look into coming within the bond markets to get cheaper debt. So that speaks to an aspect of maturity of the Kenyan capital markets, which is very commendable.
As the corporate bond market expands, analysts note that it not only provides companies with stable financing options, but also strengthens the wider capital market ecosystem. This is expected to create more investment opportunities and support key national development projects. Dennis Otieno, Citizen TV.